Welcome to the Transparent FX Academy. In this video, I'll speak about USDJPY. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the commitment of traders, so the COT data, which is what the big players and institutions are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight onto the charts. Starting here on the monthly time frame, what we can see is that we have a market which is testing and rejecting to the upside a quite strong monthly demand and support zone. In fact, what we know is that from here, all these previous rejections to the upside were created. Every time the market tested this strong monthly demand and support zone, a huge rejection to the upside was created. And right now, we're seeing the exact same zone. The market tested the same area and has already started rejecting it to the upside. So again, the market is reacting to the exact same level of historical demand and support, showing strong institutional buying inside of this area. And we will be speaking about the institutional positioning in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that here on the monthly, we are seeing the rejection away from a strong demand and support zone. And let's drop down on the weekly time frame. Now, from a weekly perspective, what we can notice is a perfect inversion of structure from a bearish trend to a bullish trend. In fact, what we can notice here is that the market was creating weekly lower lows and lower highs. Then the market 3 times failed in continuing lower and was met with strong buying pressure. And now the structure has completely inverted, because with this impulse to the upside right here, the market broke above structure, creating new weekly higher highs and now potentially weekly higher lows. Now, if we are to identify this structure, it is very easy to notice how this is the level I'm speaking about. This zone was the previous support, turned resistance here and here after the market broke it to the downside. As we know, previous support, once it is broken to the downside, becomes resistance. Now the market broke back above the area. So this previous resistance is now once more acting as support. So we are seeing this inversion from a bearish market to a bullish market, with a triple bottom being created here when the market 3 times failed in continuing lower. The next logical step would be for the market to start creating weekly higher highs and higher lows, completing this weekly inversion of trend from a bearish market to a bullish market. What we can also notice is that from a pattern standpoint, we have a very clear impulse followed by a correction. Now, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And what we can notice is that the market retraced exactly to the zone in between the 50% and 0.618 retracements. Now, that is exactly what you would expect, because the market usually retraces to the Fibonacci levels, which are in perfect confluence with structure, creating confluence of demand and support that comes both from the Fibonacci levels and the horizontal structure. In this case, this area here is the confluence of support and demand. The market is testing it and has already started rejecting it to the upside. Dropping down on the daily time frame, what do we see? Now, here in the daily, the situation is very clear. We can notice how the market is inside of an accumulation area. Usually, when you see a lot of horizontal price action, usually means that there is institutional buying going on, and this is an accumulation area. Why the institutions need accumulation areas in order to execute their orders? Well, because as you know, in the market, for every buyer, there needs to be a seller. For every seller, there needs to be a buyer. So if there isn't enough liquidity to buy at that specific moment, so this means that there aren't enough sellers at that specific moment, accumulation areas give the possibility for institutions to accumulate their longs in time. So execute more and more buy orders as the market remains inside of the area of price that is of interest for them. And speaking about institutional buying, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing. Now, if we're looking at the data for the JPY, we have to keep in mind that we are looking at JPY USD, because all currencies on the spot are traded against the USD. And what we can see here is that net positions have been dropping, going from 179K down to 77K. And this means that institutions have been shorting the JPY, increasing their shorts from 21K to 90K. Now, if institutions are shorting the JPY, since all currencies on the spot are traded against the USD, they are longing USDJPY by shorting the JPY. So that is exactly what is going on. Institutions have been longing USDJPY by shorting the JPY, making USDJPY stronger, confirming that this is definitely an accumulation area and there is a good probability of seeing a potential rejection to the upside away from this accumulation zone. So in a situation like this, what would I expect? And by the way, if you still haven't, make sure to join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this is a strong accumulation zone. And what would I expect? Well, first of all, trading is reactive and not predictive, as my students know very well. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to directional aspect of the market. But when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this demand and support zone. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure that you click on the like button to support the channel. Also, any questions you might have, let me know in the comments below. Also, new pairs that you would like me to cover in my next videos. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.